$3,200. That is the exact amount a 61-year-old retired engineer, a green card holder for 15 years, withdrew from a Chase ATM in Fremont, California. He was not a criminal. He was not hiding anything. He was paying his kitchen contractor. 12 days later, his bank account was frozen. 26 days later, 2 Homeland Security agents knocked on his front door. And the worst part? He had done nothing illegal. If you use cash in America, if you have ever walked up to an ATM and withdrawn more than $1,000, this video is the most important thing you will watch this year. Because there are 5 invisible tripwires connected to every ATM machine in this country right now in 2026, and nobody is warning you about them. Not your bank, not your immigration lawyer, not the government. Stay with me for the next 15 minutes, because what I am about to show you could save your family thousands of dollars, your credit score, and your immigration status. Let me tell you what happened to Praep Patel. Real name, real case. Praep is a 61-year-old Indian man, green card holder since 2011, retired engineer. He lives in Fremont, California with his wife. His mortgage is paid on time, his taxes are filed every year. He has done everything right. In January 2026, he needed to pay a contractor renovating his kitchen. The contractor offered a 15% discount for cash payment. That is a normal thing. Many contractors do this. So Praep went to his Chase ATM. Tuesday, he withdrew $3,200. Thursday, he withdrew $2,800. Saturday, he withdrew $3,000. Total, $9,000 in 1 week, all from his own savings account, all legal, all his money. 12 days later, he received a letter from Chase Bank. Subject line, account review, activity hold. His debit card stopped working. His automatic mortgage payment bounced. His wife could not buy groceries. 26 days after that first ATM withdrawal, 2 agents from Homeland Security investigations knocked on his door. They were holding a folder. Inside that folder, 6 months of his transaction records, his 2024 tax return, a printed map of every ATM location he had visited in the past 90 days. They asked him one question. Mr. Patel, are you sending money to anyone overseas? He was not. He was paying a contractor. But the algorithm did not care about contractors. The algorithm saw a pattern. Repeated cash withdrawals, amounts just below the $10,000 reporting limit, increasing frequency, total approaching $10,000. It triggered a suspicious activity report, and that report traveled from Chase Bank to FinCEN to the Department of Homeland Security in less than 72 hours. Praep was eventually cleared after 41 days, but here is what it cost him. $4,300 in immigration attorney fees, $200 late fee from his mortgage company, 38-point drop in his credit score. All of this because he wanted a discount on kitchen tiles. And if you think this cannot happen to you, I need you to keep watching. Because in 2026, the rules have changed, the threshold has dropped, and the pipeline from your ATM to DHS is faster than ever before. Let me explain how the United States government monitors your cash. Because most people have no idea there are 3 separate systems running at the same time. System 1, the Currency Transaction Report, the $10,000 rule. Under the Bank Secrecy Act of 1970, codified at 31 United States Code Section 5313, every bank in America must file a report with FinCEN, the Financial Crimes Enforcement Network, for any cash transaction above $10,000 in a single business day. Automatic, no warning, no permission needed. The report includes your full name, social security number, address, date of birth, and the amount. Most people know about this one, but most people do not know about the next two. System 2. The Suspicious Activity Report. No minimum. Under 31 United States Code, Section 5318, banks must file a SAR, a Suspicious Activity Report, for any transaction of $5,000 or more that they believe is connected to illegal activity or designed to avoid reporting requirements. But here is the terrifying part. There is no minimum dollar threshold when structuring is suspected. A compliance officer can file a SAR on a $500 withdrawal if your behavioral pattern looks suspicious. And the bank is legally prohibited, under federal law, from telling you a SAR has been filed. If a teller hints at it, that teller faces criminal penalties. You will never know it happened. System 3. The $3,000 rule. The one nobody talks about. Under 31 CFR Section 1010.415, any purchase of a monetary instrument, a money order, cashier's check, bank draft, or traveler's check involving cash between $3,000 and $10,000 requires the bank to verify and record your full name, date of birth, social security number or alien identification number, your address. That record is kept for 5 years and is available to FinCEN, the IRS, and law enforcement, on demand without a warrant. 3 systems, running simultaneously, right now, on every transaction you make. Now here is what changed this year, and this is the part that most people do not know. On March 7th, 2026, FinCEN issued an expanded geographic targeting order covering money service businesses in Arizona, California, New Mexico, and Texas. This order dropped the currency transaction report threshold from $10,000 all the way down to $1,000 for cash transactions in designated border counties and zip codes. If you live in or even travel through these areas: Arizona, Maricopa County, Pima County, Santa Cruz County, Yuma County. New Mexico, Bernalillo, Doña Ana, San Juan. Texas, Cameron, El Paso, Hidalgo, Maverick, Webb. California, parts of Imperial County and San Diego County, including zip codes 91910, 92101, 92113, 92154, 92173. If you use a check cashing store, money transfer service, or currency exchange for any amount above $1,000, a federal report is filed with your full identification, automatically. The official reason? Stopping cartel drug money. Treasury Secretary Scott Bessent stated publicly that the order targets fentanyl trafficking organizations. But here is the reality, and I need you to hear this clearly. The system does not distinguish between a cartel operative and a retired grandfather paying rent. It captures everyone. This order runs through September 2nd, 2026. Now let me show you the 5 traps. Trap number 1. The ATM pattern trap. Banks do not only report transactions above $10,000. Banks use internal monitoring algorithms that flag patterns below $10,000. Former bank compliance officers have confirmed on record that their systems flag your social security number for cash withdrawals at or above $3,000. Multiple withdrawals approaching that threshold, $2,900, $2,800, $3,100, trigger an internal alert. Chase, Bank of America, and Wells Fargo all set internal monitoring thresholds between $2,000 and $3,000 for what they call patterned cash withdrawals. You will never be told this threshold exists. You will never be told a SAR was filed, and you will never see it coming. Trap number 2, the structuring trap. This is the most dangerous trap and the most misunderstood. Under 31 United States Code, Section 5324, it is a federal crime to structure transactions, meaning to intentionally break a larger transaction into smaller ones to avoid reporting. Maximum penalty: 5 years in federal prison and a $250,000 fine. Here is what most immigrants do not understand. You do not need to know the law to be charged with breaking it. The government only needs to prove that you intended to keep your transactions below the reporting limit. If you withdraw $9,500 on Monday and $9,500 on Tuesday, the government will argue that you structured, even if you simply needed cash on both days. Real case: Khalid Karan, Palestinian-American convenience store owner in North Carolina, a former firefighter who came to America with $3,000 and spent 17 years building a business. He made regular cash withdrawals under $10,000, money from his own legal store earnings. The IRS seized his entire bank account, over $150,000, without charging him with any crime. Agents stormed his store, blocked customers, handed him a form titled Consent to Forfeit. One agent told him that refusing to sign disrespected the government's authority. Khalid signed because his native language is Arabic and he did not fully understand the English document. His money was gone. The Institute for Justice later documented that from 2005 to 2012, the IRS seized over $240 million in structuring cases, where 1/3 of victims had committed no other crime, just deposits or withdrawals under $10,000. Trap number 3, the $1,000 border trap. If you visit family in El Paso and cash a paycheck for $1,500 at a check cashing store, a federal report is filed with your full identification. If you buy a money order for $1,200 at a convenience store in San Diego zip code 92154, your name, date of birth, and identification number are recorded and sent to the federal government. There is no exemption for legal residents. There is no exemption for citizens. Everyone is captured. Trap number 4, the SAR-to-DHS pipeline. Here is where immigration enforcement enters the picture. When a SAR is filed, it enters the FinCEN database. Under a data sharing agreement signed in April 2025 between Treasury Secretary Bessent and DHS Secretary Homan, ICE requested information on 1.28 million taxpayers. The IRS disclosed records for 47,289 individuals who matched their database. Now, 2 federal courts have since stepped in. In November 2025, a federal court in Washington, D.C. ordered a temporary suspension on IRS-ice data sharing and found the agreement likely unlawful. In February 2026, a federal court in Massachusetts prohibited DHS from using data from that agreement. But here is what those courts did not do. They did not order the 47,000 records already in ICE's possession to be destroyed. That data is still there. If your name is in that batch, your financial history is visible to immigration enforcement right now. The pipeline works like this. You withdraw cash in a pattern. Your bank files a SAR with FinCEN. FinCEN data is accessible to hundreds of agencies, including ICE. ICE cross-references with the 47,000 IRS records already obtained. Homeland Security Investigations opens a case. An agent appears at your door. This is not hypothetical. This is operational. Trap number 5, the civil forfeiture trap. Under civil asset forfeiture law, the government can seize your cash without charging you with a crime. They file a case against your money, not against you. The legal title is literally United States versus $150,000. The standard of proof is preponderance of evidence, meaning the government only needs to show it is more likely than not that your money is connected to illegal activity. Your ATM withdrawal pattern is the evidence. Real case: Randy Sowers, a dairy farmer in Maryland. 30 years of selling milk and ice cream at farmers' markets, where customers pay in cash. A bank teller told his wife Karen that keeping deposits under $10,000 would save the bank paperwork. The teller never mentioned federal law. In February 2012, the IRS seized nearly $63,000, their entire bank account. Prosecutors offered a deal: forfeit $29,500 and we drop everything. Randy accepted because he could not afford to fight. A dairy farmer lost $29,000 because a bank teller gave bad advice. Let me show you exactly what one wrong ATM decision costs in real dollars. Scenario 1. You withdraw $8,000 from an ATM over 4 days. Bank files a SAR. Account frozen for 21 to 60 days. You miss a mortgage payment, $200 late fee. Credit score drops 25 to 40 points. DHS sends a letter. Immigration attorney, $4,000 to $8,000. Total cost of one ATM pattern, $4,400 to $8,200, plus permanent credit damage. Scenario 2. You live in a GTO zone and cash bi-weekly paychecks of $2,200. That is 26 federal reports filed in 1 year, 26 records in the FinCEN database, 26 opportunities to trigger a flag. Scenario 3. Civil forfeiture. Average legal cost to fight back, $15,000 to $25,000. Average process duration, 8 to 14 months. During that time, you have zero access to your own money. Now compare. If you use electronic transfers instead, 0 CTRs, 0 SARs, 0 forfeiture risk, 0 legal fees. A $10,000 Zelle transfer generates 0 federal reports. A $10,000 cash withdrawal generates 1 CTR automatically. Same money, same purpose, completely different consequences. Here is exactly what you do starting tonight. Step 1. Eliminate cash patterns immediately. If you must withdraw cash, withdraw the full amount in one single transaction. A single withdrawal of $9,000 generates a CTR that is legal and raises no suspicion. 3 withdrawals of $3,000 across 3 days creates a pattern that triggers a SAR. 1 large withdrawal, transparent. Multiple smaller ones, structuring signal. Be transparent. Take what you need all at once. Step 2. Switch to electronic payments. Pay contractors with Zelle, bank transfer, or a check. These transactions do not trigger CTRs or SARs because they are not cash. The $3,000 rule applies only to cash purchases of monetary instruments. Electronic transfers are completely exempt. A $10,000 Zelle payment generates 0 federal reports. A $10,000 cash withdrawal generates 1 CTR automatically. Same money, same purpose. Completely different consequences. Step 3. Know your geography. If you live in or travel through Arizona, California border areas, New Mexico, or Texas border counties, your threshold is $1,000, not $10,000. Do not use check cashing services or money orders for amounts above $1,000 in GTO zones. Use a bank with direct deposit instead. Avoid cash entirely in these areas when possible. Step 4. Keep documentation for every large transaction. If you withdraw $5,000 to pay a contractor, keep the invoice, the receipt, the contract, and a photo of the work. If you buy a used car for $8,000 cash, keep the bill of sale, the seller's name, and vehicle registration. Praep Patel was cleared in 41 days because his attorney produced the renovation contract and the contractor's business license. Without those documents, the investigation would have continued indefinitely. Documents are your shield. Step 5. Never sign anything under pressure. If federal agents appear at your home or business and present any document, especially one titled Consent to Forfeit, do not sign. Say these exact words. I want to speak with my attorney before signing any documents. That is it. Nothing else. Do not explain. Do not argue. Do not apologize. Khalid Karan signed because agents pressured him and implied they would visit his wife. He lost over $150,000. You are not required to forfeit your property without a court order. You are not required to answer questions without counsel. The Fifth Amendment protects your right to remain silent. The Fourth Amendment protects you from unreasonable seizures. Use them. I want you to think about your family for one moment. When Praep's account was frozen, his wife could not buy groceries for 11 days. His automatic insurance payment failed. His car was uninsured for 2 weeks without him knowing. And his 16-year-old son's college savings account, held jointly, was also frozen. When Khalid Karan's account was seized, he could not pay his 4 employees. 4 American citizens went without paychecks for 3 weeks. He took a line of credit against his previously debt-free home to keep his business alive. At 60 years old, his American dream was gone. When Randy Sowers lost $63,000, his dairy cows could not be fed. Cows do not wait for federal investigations to conclude. The impact is never just on you. It is on your wife who cannot buy groceries, your children whose college accounts are frozen, your employees who miss paychecks, your parents back home who depend on your monthly support. Every dollar you protect by understanding these rules is a dollar that feeds your family. Every electronic transfer you make instead of a cash withdrawal is a wall between your family and a federal investigation. 5 numbers. Memorize them tonight. $10,000, the CTR threshold. Every cash transaction above this is automatically reported. No exceptions. $5,000, the SAR threshold for banks. Any suspicious transaction at or above this amount must be reported. $3,000, the monetary instrument recording threshold. Your identity is verified and stored for 5 years. $1,000, the GTO threshold. If you live in designated border areas of Arizona, California, New Mexico, or Texas, this is your reporting line through September 2nd, 2026. 0. The minimum for a SAR when the bank suspects criminal activity. There is no floor. A compliance officer can file on any amount if your behavior pattern looks suspicious. 5 numbers, 5 traps, 5 protections. If this video gave you information that nobody else was giving you, hit the like button right now. It costs you nothing, but it tells the algorithm to show this to the next Praep, the next Khalid, the next family that needs this before it is too late. Subscribe to this channel and turn on the bell notification because the rules are changing faster than ever in 2026, and I drop new updates every few days. Join our WhatsApp community. The link is in the description and the pinned comment for instant alerts when new rules affect your status. And share this with one person in your family who uses cash regularly. One share can save someone $4,300 in legal fees and 41 days of a frozen account. In the next video, I am going to show you what happens when you travel outside the United States and your bank reports your absence to DHS, a rule that can cancel your green card without a single letter of warning. That video drops in 3 days. Do not miss it. Until then, protect your cash, protect your family, protect your status. I will see you in the next one.